Dear students, Namaste, welcome back. So, in the previous class, you have learned about what is liquidation, what are the process we follow, who is a liquidator, and what are the modes of liquidations. So, those things you have understood in my previous class. So, in today's class, we are going to discuss about order of payment. So, what is this order of payments? See, liquidation means you have already understood that it is nothing but closing down of the company or bringing the company to an end, the company's life to an end. So that is what we said as liquidation. So in that we also learned that here we are going to realize all the assets of the company, and at the same time we are going to settle down all the debts of the company. While settling down the, de- the debts of the company, so we have to follow a specific order. That means who will be paid first, who will be paid second, who will be paid third, fourth, fifth. So that is what we call it as a order of payments. So first, to whom we are going to make a payment, to whose debts we are going to clear. Second, whom debts we are going to clear. So that is what order of payment. So now let us understand to whom we are going to settle the payments once the liquidation process, that is once the assets gets realized. So the company's debt and liabilities should be discharged out of realized assets in the following order. So the entire debts and liabilities has to be paid. So in the particular order, that is out of the realized assets. So number one, we do have here secured creditors. What is this secured creditors? See, in general sense, we call secured creditors. Creditors are those one who has rights, one who has created a charge on the assets are called secured creditors. That means while borrowing the debt, we might pledge some asset to them. For example, we might pledge land and building. We might borrow money against land and building. We might borrow money against plant and machinery, what we have. Or we might borrow money on the basis of stock, what we have. Clear. So this is what exactly we call it as a secured creditor. Secured creditors means the borrowings which creates a charge on the company's assets. So that is what we call it as a secured creditors. So let us understand in your book way. So what exactly your book says? Secured creditors, the name itself reveals that these type of creditors hold some security for debt. So that means there will be some security. Clear? So against the debt due to them from the company, such as pledge. So they used to pledge, as I said, it might be land and building, or it might be missionaries, it can be anything. So we call that as a mortgage also. Clear? So that pledge is also called as mortgage, or charge or lien. So it might be a charge or it might be a lien on the company's property. So their rights are discussed in section 529 subsection A. So that is the rights which they used to have on the assets. So in detail you can refer under section 529 subsection A. So this is the first one is secured creditors. Even this income tax and sales tax dues, if any, that is also we treat under secured creditors. So first we clear income tax and sales tax, if any, due. So next, second one is preferential payments. So preferential payments means it is very simple. One who have preferential rights in the payments. So they are called as preferential payments. That means the priority in payment. They are called as preferential payments. So these are discussed in section 529 subsection 4 and 530. So that is, we are going to discuss in detail about that preferential payments. So I have chosen few items so that you can understand in detail. So that is, in preferential payments, we always give first priority for cost of liquidation. See, once the liquidation process starts, so there will be a cost involved, clear? So that cost of liquidation, clear? So we also call it this cost of liquidation as a cost of winding up. That is also come under cost of liquidation, and that is legal representative of a company, that is liquidator. So we call him as a liquidator, one who takes a charge on the company. So at the time of liquidation, who will realizes all the assets, who will evaluate all the assets, and who will discharge all the debts of the company. We call him as a liquidator. So is the remuneration, that is liquidator's remuneration, cost of winding up. Then if any legal charges paid, if any legal charges that is paid to court or paid to an advocate, clear? So those are all considered under preferential payments. So what is this cost of liquidation? So as I said, there are a lot of cost involved at the time of making liquidation process. So that is what cost of liquidation. So after this, even debenture holders, so who will have a charge on the company's assets? See, one who have a complete charge on the company's assets, that is fully pledged property. So there comes under secured creditors. If a debenture holder having floating charges on the company's asset, what is this floating charges? See, floating means, so on flotation they used to have a rights in the company's assets. So in such a case, such kind of debentures also, debenture holders also come under preferential payments, clear? So after this, next we do have unsecured creditors. So who are all unsecured creditors? So who have lent the money to the company, but one who do not have any charge on the assets of the company. One who do not have any charge on the assets of the company. So they are called as unsecured creditors. They are creditors, but their credit, whatever their lented amount, will not be have any charge on the assets. So them we call them as a unsecured creditors. So when are we making a payment to them? After the debenture holders having floating charges. So after preferential creditors, unsecured creditors attain priority. So after the preferential creditors, we are going to clear the unsecured creditors. So then in the case amount is insufficient, these will be paid proportionately from the balance. If there is a amount, so that is a realized amount is lesser than the amount payable, so that will be cleared on proportionate, clear? So that is what we call it as unsecured creditors. So next is preference shareholders. So at the time of beginning of the lesson, I said, there will be two types of shareholders. One is equity shareholder and another one is preference shareholder. One is equity shareholder and another one is preference shareholder. So preference shareholders are those shareholders, one who do have a preferential rights in the company. What is this preferential rights in the company? See, these shareholders will have a priority at the time of distributing dividend, that is nothing but profit, at the time of winding up of a company, so in their resettlement of money. So when resettlement of payment or clearance of debt, so preferential holders should be settled first and later equity shareholders will be settlement will be made to the equity shareholders. That is what preference shareholders is all about. So next is we do have equity shareholders. In case any surplus remains after making payments as mentioned above, that means if any amount left out after making a payment to the preference shareholders, so that amount will be distributed among the equity shareholders unless specifically mentioned that preference shares are participating shares. If preference shares are participating shares, so then they will have a participation rights. If not, then equity shareholders will be settled right after making a payment to the preference shareholders. So if the preference shares are participating, they are entitled to have a right to participate in such kind of surplus. So this is what equity shareholders, how the settlement will be made. So next we are going to understand preferential payments or preferential creditors. So that we are going to understand in detail. So as I said, preferential payments, the payments which do have a preferential rights at the time of settlement, we call them as a preferential payments or preferential creditors. So these payments have to be made before the payments of unsecured creditors. Remember this, we are going to make a payment before paying to the unsecured creditors, except the cost of liquidation and the remuneration payable to the liquidator. So these two, excluding these two, that is cost of liquidation and remuneration payable to the liquidator, so the payment if we are making, they are come under preferential payments. So some preferential creditors or payments are as follows. So to make you understand in better ways, I am giving few examples. So that is all revenues, taxes, cess and rates due to the central or state government or to a local authority payable within 12 months next before the commencement of winding up. So any taxes, any cess, any rates which is due to central government or state government, or it might be a local authority, clear? So they have to be paid first. So next is all wages or salaries or commission to an employee due for period not exceeding 4 months within 12 months prior to relevant date. This amount is limited to rupees 20,000. So there is a limitation for this, that is 20,000. All accrued holidays remuneration payable to an employee. So whatever accrued holiday remuneration which is outstanding, which we are supposed to payable to the employees, so that has to be cleared. All amount payable to an employee under ESIC, that is Employees State Insurance Corporation. If any ESIC payment is due, that has to be cleared during the 12 months prior to relevant date, unless the company is owned up voluntarily for reconstruction and amalgamation purpose. Next is all amounts payable to an employee other than workman under the Workmen's Compensation Act, unless the company is owned up for reconstruction and amalgamation purpose. So whatever the amount payable to an employee, so under the Workmen's Compensation Act, that should be cleared. So all sum due to an employee from the provident fund, pension fund, gratuity or any other fund maintained by the company for the welfare of the employees. So that is all the dues which has to be provided for provident fund or gratuity or any other fund maintained by the company for the welfare of the employees. So that has to be cleared. the expenses for any investigation held in pursuance of section 235 or section 237 insofar as they are payable by the company. So any expenses which is related to investigation, so that has to be cleared. The above mentioned debts rank equally among themselves. All the listed, what all I've said, they are all equally among themselves. Clear? So the relevant date refers to the date of passing of resolution. Understand? So the resolution date, so passing the resolution date, we call it as a relevant date. So that appointment of a provisional liquidator in case of compulsory wind up. So these are the order of payments, so which we are supposed to follow at the time of liquidation. So we cannot make payment according to our wish or company's wish or somebody's wish. So we have to follow a certain order, so which who has to be paid first, who has to be second, so that is accordingly which I have listed in this slide. So according to that order only we are going to make a payment to the all the external debts. So this is exactly order of payments, and it is very very important you to understand. You should remember this, because this we are going to apply directly at the time of solving the problem. So when we do a solution, so that is on liquidation of company's problem, when we are going to solve, so we need this order, we need to follow the same order to clear all the debts of the company out of assets realized in the company. So this is what exactly order of payments. So next we are going to understand statement of affairs. Next we are going to understand statement of affairs. What is this statement of affairs? See, when the court orders or passes a winding up order or appoints an official person, that is legal in charge liquidator, as a provisional liquidator, these officers and directors of the company must submit a statement. So that is, we call it as a affairs of the company, so which will have a affairs of the company. So that statement itself we call it as a statement of affairs. So it should be in a prescribed format, which has to be verified, which has to be affidavit. This statement has to be signed, this statement has to be verified, this statement has to be attested by the directors and as well as provisional liquidators. So that particular statement we call it as a statement of affairs. Clear? So let us understand. When the court has passed a winding up order or appointed the official liquidator as a provisional liquidator, the officer and the director, that is, officer is nothing but a provisional liquidator, and or directors of the company must submit a statement as to the affairs of the company in the prescribed form, which must be verified by an affidavit. This statement is known as statement of affairs. So the statement of affairs must be submitted to the liquidator within 21 days from the date of winding up order, or within such extended time not exceeding 3 months as the liquidator or the counterparties or court permits. Clear? So which the court permits. So next is, what are all the contents of statement of affairs we should understand. See, the major contents which this statement of affairs will have, that is the assets of the company. Then it includes stating separately the cash in hand and cash at bank at the negotiable securities. So all this, the debts and the liabilities of the company, the names and address of its creditors, stating separately the amount of secured and unsecured debts. In the case of secured debts, particulars of the securities held by the creditors, their values and the debts on which they are given, and at the same time the debts due to the company and a name and address of the person from whom they are due and the amount likely to be realized. So all this has to be, there it should be in the statement of affairs. Such other information as may be required by the official liquidator of the central government. See, the statement of affairs is open to inspection by any person stating in writing to be a creditor or contributory. This statement must always be verified by an affidavit. This should be prepared in the prescribed form as set out by the Supreme Court. So that prescribed format is provided by the Supreme Court. So according to that only it has to be prepared. Okay, so next we are going to understand liquidator's final statement of account. So this is what we are going to prepare in this lesson. So our major part of learning is the liquidator's final statement of account. So what is this? How are we going to prepare this? Let us learn that. So liquidator's prime duty is to realize the assets of the company and to make payment to creditors. For this purpose, he has to prepare a statement. How much he realized and how the same was paid to the claimants. This will be in the form of a cash account. Such a statement of account is known as liquidator's final statement of account. See, we are going to prepare a liquidator's final statement of accounts. So, here the major role of a liquidator is to realize the assets of the company and making a payment to all the debts. So, making the payment to all the debts. So this is a kind of cash account. So where all the assets will be sold and cash will be debited and all the liabilities is settled. So payment will be made. So that is what we call such kind of account. We call it as a liquidator's final statement of account. After its preparation, the liquidator has to submit it to the court in case of compulsory winding up and to the company in case of voluntary winding up. Try to understand. So once the liquidator's final statement is prepared, if the liquidation is in case of it is a voluntary liquidation, so that has to be submitted to the company, or in case of compulsory winding up, that should be submitted to the court. As it resembles a cash book, this statement of account consists of amount realized by the liquidators. So that is all the receipts by selling all the assets we are receiving, and payment of various liabilities, that is all the payments, so which we are going to enter in the credit side. So amount realized by the creditor. See, the major amount which are all realized by the creditors are cash in hand and at bank. See, cash in hand, which is a ready cash available in the company. So that is what we call it as a cash in hand, and which is kept in the bank, we call it as a cash at bank. So here, there is no much effort is required. So on this part of liquidation to realize the amount from this source. Sale proceeds of assets. So the liquidator has to realize the assets of the company as well as from debtors of the company. So where he is going to sell off all the assets of the company. So that we are call it as a sale proceeds of assets. Next is surplus from secure creditors. For secured creditors, payments may be made to them on their claims or up to the amount realized by sale of securities held by them, whichever is lesser. So that means you have to understand here, sales proceeds of asset, that is nothing but, see, that secured asset, whatever it is there, surplus from secured creditors. Suppose you have a land and building which is worth of 25 lakhs, and we have we have raised the credit against to that asset, so around 20 lakh rupees. So now we are settling it down. So now the value of asset is more, and where the value of credit raised is less, so whichever is less we are going to consider. So that is what surplus from secured creditors. So that 5 lakh rupees, in case the creditor dispose of the securities and if the realization exceeds their claims, then the excess or surplus is handed over to the liquidator. So whatever excess amount is there, that 5 lakh rupees, suppose 25 lakh worth of building and 20 lakh rupees credits we have raised. So after settling that, we are getting 5 lakh rupees excess. So that surplus should be shown as a receipt, but payment to creditors is not to be shown in the liquidator's final statement of accounts. On the other hand, realization is less than the claim. Such a deficit to be added to the unsecured creditors. So if the value of land and building is 25 lakh and we have raised a debt, that is credit 30 lakh rupees, so 5 lakh rupees there is a deficit. So such kind of deficits has to be added to the unsecured creditors. Okay, so next is contributions by contributories at the time of liquidation. The liquidator can make a call on partly paid shares to meet inevitable payments. Suppose, say, after selling all the assets of the company, still the company has to make payment. There is outstanding payments is left out, so which has to be made compulsorily. So in such a case, whichever all the partly paid shares are there, that is only they have paid till first call, only they have paid till allotment money, so the rest calls were made by the company to meet up that shortage, so which are all inevitable payments. Clear? So and other payments of liabilities. So next is liquidators financial statement. So in this one more thing is very important in liquidators final statement, that is liquidators remuneration. So what is this liquidators remuneration? See, a liquidator is entitled to get a remuneration for his service since he is a legal representative of the company, one who has been appointed by the court. So he cannot come on charity basis. So he will have his own charges. Clear? So that is what we call it as a liquidator's remuneration. So he is entitled to get a remuneration for the service which he is rendering. Generally, his remuneration is in the form of commission based on assets realized. Try to understand. Usually, the liquidator's remuneration will be in the form of commission. Commission on what? Commission on assets realized. So this point you have to understand very well, because this is also one of the application point which we use at the time of solving the problem. So his remuneration is always be a commission which is always on the percentage, in the percentage on the assets realized. Okay. So his commission is always on the based on the assets realized and on payments made to unsecured creditors. So even we give some percentage on the payments what we are making on unsecured creditors as well. While determining his commission, the following factors have to be taken into account. So while deciding is commission. The following factors we have to take it into consider, so we cannot directly decide upon the commission. So that is cash in hand at bank, how much cash is ready cash available with the company. So that is what cash in hand and cash at bank, because here you need not to put much effort, clear, because it is already in the form of cash. So that is we have to consider. Assets given as a security of a fully and partly secured creditors. For calculating commission, the surplus realized from such assets should be taken into account. So we are going to calculate commission on this kind of assets as well. Then preferential creditors are unlike unsecured creditors, and the commission is based on the amount. Preferential creditors are also considered like unsecured creditors only. So whenever we calculate commission on unsecured creditors, we must include preferential creditors as well at the time of making a payment to the unsecured to the liquidators remuneration. So then deficiency, if any deficiency comes, the amount left to pay unsecured creditors may be less than the required amount. In such cases, the amount left has to be divided between creditors and liquidators. If there is a deficiency, so that deficiency has to be distributed among liquidator as well as unsecured creditors. So these are the basic information which you should know, you must know while solving the liquidators, while preparing the liquidators final statement. So these are the theory part. First you must listen to it, you must understand to it. So after that we can start solving the problem. So I'm ending up the theoretical part of liquidators of company unit. So from my next video I'll be posting a problem and solution on liquidation of companies. Thank you so much. Have an Take care and stay safe. I'll be right back with one more video. We are going to start problem on liquidation of companies.